going back to the data, in many emerging countries, the lack of ID basically prevent adults to, and also small businesses to access formal financial services. And governments have done a lot of things well, for example, using biometric technology in order to develop ID systems. So I would like to start with you, Inka, first, in terms of what governments have done well and what is missing in order to address this lack of ID issue.
Okay, great. So I think identity poverty is not a phenomenon a lot of you are familiar with, but it's something that we see every day in our parts in the emerging markets. And what does that really mean? Identity poverty is having lack of a foundational identity, and that foundational identity is really a government obligation in terms of being able to identify this is who you are, where, and your biometrics. So it's very simple. In countries where these haven't existed on a national scale, what has happened is different functions or government services have had to go and create their own duplicate identity systems. So for example, in Nigeria, we have the financial services sector having their own identity system, the voter system having their own identity system, the passport office having their own identity system, the driver's license having their own identity system. And the beautiful thing about this is that they're all in silos. So they don't talk to one another, there's no interoperability or exchange of information. However, this is a very inefficient and expensive way of doing business. So what we're trying to do now in Nigeria is to roll it all back and start with the basics with the World Bank ID4D project. And that really means, how do we ensure that we have the right legal frameworks? How do we create a foundational system that has basically the basic essentials in terms of the name, date of birth, and biometrics, etc. And then, super on top of that, build functional identity systems. So not everyone wants to travel. Not everyone wants to get a driver's license. So you can now get the function for the government services that you want. However, identity is not something that a lot of people also seek after. So when you think about identity poverty, even where systems exist, people don't want to be recognized. They don't want to be identified. So what we did and what the Nigerian government did a couple of years ago, or last year, was to introduce a new regime saying that for every SIM, every mobile phone number must have attached to it a national identity number. And that was the only way to drive adoption of identity. Because we know that in Nigeria, for example, we have, I think, 100% tele-density penetration, telephone penetration, but yet identity wasn't there. So there's no inducement for people to seek out an identity system. Another challenge is the civic registries are also manual and also cut off from the main identity system. So how do we bring all these things together into a functional working system using biometric identity? So again, I can go to the passport service, validate with my fingerprint, and my foundational identity is extracted, and then I can build different functional use cases and identities for government services. So I'll stop there.
Yeah, that's great. I think that the experience in Nigeria is really interesting. I mean, Nigeria is a huge country with more than 200 million population, like one of the largest economies in Africa, vibrant innovation.
The largest.
Yeah, the largest. That's right. And one of the vibrant innovation and fintech ecosystem. So I want to turn to Victor and Alvin here. I know that both Finclusive and Flex ID, you are providing ID and KYC solutions in Africa and also in emerging economies. So I would like to start first with Victor. Do you have any views in terms of what governments and what the public sector have done well to improve the ID systems, and what is missing?
Yeah, so our experience operating in Africa as a startup and as a private company has been quite insightful in the sense that, number one, there's this sort of presumptive assumption of benevolence on behalf of a lot of governments in emerging markets. And what this essentially means is that at times you find in certain countries, it's not every public institution that sort of is motivated and has the drive to actually include everybody in the broader sort of identity infrastructure. And this reason really is almost an irrational attempt in some societies to sort of have advantages when it comes to elections. And in some cases, you find we still have legacy colonial problems that are plaguing majority of these societies. So, for example, if you look at a country like Zimbabwe, we had these rural areas that were classified as tribal trust lands. And in these particular areas, banks did not bother to set up branches, insurance companies did not bother to set up any infrastructure. And unfortunately, a lot of these legacy issues have continued on into now these emerging markets where traditionally the financial institutions themselves sort of have no incentive to go out and actually build out infrastructure. And unfortunately, a lot of these governments are cash-strapped. So you will find majority of the times identity initiatives, unless being pushed by the World Bank and other multilateral institutions, tend to not have a high priority when it actually comes to the list of tasks that these governments want to do. And this is where the opportunity really for private sector comes in, as earlier, when she spoke about the fact that in majority of these countries, you find that with identity, really, if you have a majority of unbanked individuals, the key thing now is to build infrastructure which combines those silos together. So if you have your SIM registration silo, if you have your financial data silo, if you have your national government silo, this is where technology now, like blockchain technology and self-sovereign identity technology come in to essentially sort of produce a low-cost solution which would aid both governments in not having to reinvent the wheel and having to over-invest in this infrastructure as the populations keep growing. So definitely our experience with majority of these institutions has been, number one, there is an opportunity for private sector to work hand in hand with government. However, there is definitely a need to build innovations and infrastructure which will combine a lot of these data silos in a manner that is cost efficient and which can be executed in a shorter period of time.
Amit, anything to add on this?
Yeah, no, absolutely. A couple key points here. I think, one, it's really important to recognize that a lot of the identity validation, verification, and digitization that's happening from an innovation standpoint is really being led in the emerging and frontier markets. I mean, in the United States, we still rely on paper forms of ID, and some of that's codified in law. So we have to overcome those barriers. The second is that we can't lose sight of, in the financial services and inclusion perspective, for a financial access, running Know Your Customer and Know Your Business, it's really important to understand identity from the standpoint of businesses and legal entities as well. So being able to do the background due diligence, KYB, Know Your Business, has equal import there. Thirdly, finally, privacy issues are coming to the fore to regulators and policymakers, and understanding that the absolute disclosure of underlying personal identifying information, entity identifying information, doesn't have to be fully disclosed every single time. So you have both a redundancy and an inefficiency problem in financial services, where financial intermediaries or gateways to get access to financial services and products are constantly doing identity verification and the disclosure of personal sensitive information or economic data. We now have technology to be able to prevent that, to say you come in one gate, like for example within the Stellar network, you come in one gateway, you should be verifiable and validated by any other network participant, and you can do so in a way that just discloses the specific attributes that that financial services partner needs. Right? A name verify, an address verify, ensuring that you're not on a particular sanctions or watch list and the like. And so by combining these tools, you not only create efficiencies in the ecosystem, a la providing efficient access. Secondly, you provide equitable access, which is really important from the financial inclusion standpoint. Thirdly, you take away a lot of the redundancies that have driven up the cost for organizations and individuals to get that access. And fifthly, you help provide the issues around data privacy that is paramount and finally getting recognized by more and more governments.
Thank you very much for that. I mean, before going to the private sector contribution to digital ID, I just want to ask Inka that actually you touched upon this in your previous panel, and I know that you are doing a lot of research on the IN area, the CBDC in Nigeria. So do you think that a CBDC would improve digital ID? And if the answer is yes, how?
Okay, so thanks for that. And I think I'll go back to just to pick on something Amit said in terms of the cost. And don't forget that financial services providers don't want to bank the poorer people because it costs too much and their accounts are zero balances. So when the cost of KYC, AML checks is higher, it really it's not a business case that they can support. So I'll go back to the question now in terms of, I'll say yes or no. And I think one of the things about the CBDC is that it's not a ubiquitous design. So depending on how it's been designed, in Nigeria, we've designed an account-based CBDC that requires identification. So basically, it will enhance identification once the product itself can be adopted and used as a ubiquitous alternative to cash. But then it depends on how you implement it and how you ensure that it scales and build network effects.
That makes a lot of sense. I mean, I know that Finclusive is part of a consortium that is also piloting UK CBDC. And any thoughts on what Inka just mentioned?
Yeah, I agree with her. I think the reverse direction is true. I think ensuring that one can do the appropriate know your customer via digital means in ways that any gateway that you access that system, whether it's a wallet provider or an application that you've downloaded, a bank that is now providing an account associated with that CBDC, the ability to come in one gateway, have a digital identifier that is associated with the KYC controls that you have to run, and that any other gateway or participant, whether it's the provider of a product or service, a wallet or account to or from financial assets are sent or received, can verify and validate near instantaneously or instantaneously, and do so without having to, again, disclose all that private data. So I think the opposite is true. I think a digital identity and a verifiable credential within the context of that ecosystem enhances the application of CBDC projects like the one in the UK and others.
Victor, anything to add on this?
Yeah, so a few days ago, I was actually speaking to members of the government in regards to this particular issue, and definitely building sort of this self-sovereign digital identity layer on top of that infrastructure would definitely enhance majority of the intended benefits, in the broader context, right? So one of the key things, obviously, is if you look at the informal sector in most emerging markets, you have individuals that rely heavily on either cash transactions and of most recently in the past decade, mobile money transactions that happen through mobile phones. However, none of these transactions, for the most part, actually offer value to these particular consumers in the sense that they can't use this data, for example, to borrow. So regardless of the fact whether a vendor in a particular market is a transactional and economically active individual, because they have no method of being able to produce that evidence, either in the form of a verifiable credential-based mobile statement or transactional statement, they are essentially kept down the socio-economic ladder. So it would be extremely advantageous if you then have the digital identity layer, which is able to actually produce these verifiable credentials that essentially can be verified by any third party to build a broader ecosystem. That would actually then enhance what users would then expect. Someone will be able to use that wallet instead of having to rely heavily on cash, because the benefits of using that wallet become extremely apparent.
This is great. So, I mean, we have covered what governments have done well, what is missing. Now I just want to get into the details of what the private sector is doing in order to contribute to enhance digital ID. So maybe, I mean, I will start with you in terms of how Web3 solutions on blockchain can transform the way that consumers and small businesses identify themselves.
Yeah, the excitement of being able to, in a native web environment, access financial services and products is incredible for broader financial inclusion. That very same technology built on blockchain enables one to therefore verify and validate near real time across the network. The upside of a digital identity and some of the work that we're doing to orchestrate a layer for identity verification validation, documentation verification validation, globally requires a number of partners across the globe to do these different tasks. Then what you can do is provide an ID or a verifiable credential that serves three purposes, because in financial services, you are obligated by regulators the world over to not only onboard and risk rate the client upon entry, you have to monitor that client ongoing, and then you have to ensure things like, for the compliance geeks in the room, the funds transfer rule, making sure that the sender and beneficiary information is known. Today's traditional financial services environment constantly discloses underlying PII information. It's very, very dangerous. A verifiable credential enables one to say, okay, I've successfully KYC'd this individual or KYB'd an organization. I can do it near real time in any environment while also protecting privacy. I can also enable the attachment of that identifier to transactions, so I just know the transaction is monitored from an illicit finance perspective without constantly disclosing the nature, purpose of it, or the underlying information. So it solves a number of different criteria in ways that the traditional financial services environment does not. And it's based on the very same technology that the financial services action, the asset issuance, the value transfer is built on itself. So it creates an inherent interoperability in that regard.
Do you want to elaborate a little bit more how Finclusive is helping to do that?
So we are an orchestration layer first. We recognize that there are a number of amazing platforms that can do identity verification, selfie liveness checks, corporate validation, and the like. There's certain pain points we've solved for with legal entity verification, corporate due diligence, beneficial ownership due diligence. And then we tie the KYC, KYB process to the issuance of the digital identity itself. So it's backed by your KYC, KYB data. The second is, for example, within the Stellar network or other like networks, now when you come into the network, you can be verified and validated by anyone else in the network to ensure KYC and KYB. Otherwise, you relegate that responsibility redundantly to every service provider. And the final piece is that you can now give the user the permissioning. Right? Now the consumer who has been KYC'd by, say, an anchor in Latin America can not only be verified and validated, but that user can say to another financial services company, here is my digitally verifiable credential. You can instantly KYC verify me without going through the redundancy of it. So we're an orchestration layer that brings a lot of these services to cover globally, with redundancy, built decentrally to provide that data verification, but then allow the regulators to see that the very intents for KYC controls are in place.
Yeah, and I think that you raise a very important point in terms of the beauty of digital ID solutions on Web3 and on blockchain, that is data portability and transparency. So actually the consumer having the control of their information, and that is I think that is the main benefit in terms of Web3 and Web2 solutions. But I want to turn to you, Victor, in terms of the work that Flex ID is doing and how your solution is contributing to address the lack of ID.
Yeah, so I mean, the story of Flex ID is a real personal one for me because it organically materialized from my own failure when I came back to Zimbabwe to open a bank account simply because I couldn't prove my proof of residence. If your utility bill isn't in your name and you don't have a lease in your name, then you have a very big problem, especially in places like Africa where we stay with a lot of our family. You can have 6 to 10 people all in the same house, but only one person is able to prove that they actually legitimately live there. So Flex ID then organically materialized from this realization. And initially, the problem I was really trying to solve is, number one, how does a person who doesn't even have smartphone be able to actually prove who they are? So the first iterations of what we created was actually functional using WhatsApp, as it's one of the most popular platforms you find in developing countries. And we also then started building different iterations on top of this, which a person could use just dial codes without having access to the internet or using a basic feature phone to be able to manage a few basic credentials about who they are. And then we then moved on to the self-sovereign identity application, which obviously then created an entire ecosystem of much more sophisticated services. One of the most impressive, I would say, use cases to date we've had is we partnered up with a healthcare provider called Ubuntu Clinics, who specialize in building these clinics in remote rural areas. Now, in these particular areas, if you go see a nurse or you see a doctor, they basically write everything about you in a counter book, right, or in a school book. Essentially, that school book is carrying very valuable information about your health. And if you want to see a doctor in the city, at times what it means you have to go through re-diagnosis, which is very expensive for majority of people. So with Flex ID, we came in and we essentially provided the nurses a platform which would allow them to start issuing these particular healthcare credentials, whether it be your health record or your prescription, directly on a physical QR code. So it really didn't matter if you didn't have a phone. You could have that QR code that you could carry, and that QR code would have a 4-digit PIN prompt that you assign when you first get it. So if someone wants to be able to verify, if you move to a city or you go to a pharmacy and someone wants to verify that data, then a prompt would then immediately come up on their phone and you'd be able to essentially put in that 4-digit PIN and they would have access to that information. And we managed to attain over 50,000 agents using this platform over the course of last year. And it was extremely exciting because that was really one of the very first times we actually saw this in action and actually impacting lives. And today, we're essentially scaling up the solution in financial services, in insurance, and in other verticals such as education, where, I mean, again, if you come to Nigeria, if you come to Zimbabwe, you have a lot of young people that are very talented and very educated. But it's extremely hard now in this sort of remote work economy. How do I prove to you that I attended the University of Zimbabwe or I attended the University of Lagos if your institution has never heard of those particular organizations? So again, as we're transitioning into this new economy where there's a lot of remote work, it's opening up access to entire labor pools that at times can't even verify their skill set, they can't verify their academic credentials. And we've come in with Flex ID, partner with particular universities and with other institutions to be able to allow their students and to allow typical users to essentially be able to get verified by any third party globally. And lastly, if you're an international business trying to do business in Africa, South America, or Southeast Asia, one of the key challenges is going to be how do you do KYC and how do you do KYB? And that essentially limits the target market that you're able to approach. So we are really seeing ourselves as opening up this API, which would give you access to any individual on the African continent, given that they give you consent and they give you permission to verify their data. And this really is exciting us in terms of the different applications that can be built and that are being built by our ecosystem of developers.
Yeah, you briefly mentioned actually the need to have the role of smartphones in some countries. I want to touch base on that in a couple of seconds, but before moving to that, I don't know, Inka, if you have any views in terms of the role of the private sector. I know that you're a professor of business, so maybe if you want to provide your views on that.
I think the private sector are doing what they should be doing. However, there's still a bottleneck I envisage, which is policy innovation. Because whether we like it or not, all the things Amit described, as nice as they are, when my compliance policy says I must collect a physical document, that compliance officer has to do that. Otherwise, it comes back in terms of fines and penalties on the organization. So we can't move alone. Private sector can't move alone. But how do we also ensure that policy innovation is there? Legislation innovation is also there as well, legislative change. So for example, in Nigeria, when we launched the e-Naira, the banking legislation does say that you have to mint physical notes, right? So what did the central bank have to do? They had to go for presidential approval to be able to mint digital currencies. Otherwise, it's not valid. It's not legal in terms of legal tender. So we have to look at the ramifications across board and realize that technology is there, but how do we fit technology into this ecosystem and ensure that we're enabling one another?
I can't agree with you more. We can have as much innovation in the private sector, and the greatest threat to innovation and practical deployment is incumbency, right? It's status quo. If in the United States we have as a legal requirement the verification and validation of a paper-based document, then the digital form of ID is just not validatable or usable by a regulated financial institution. We spend an inordinate amount of time with the government, with U.S. regulators, with non-U.S. regulators, trying to modernize legislation to enable both the elements required for identity verification and proofing, as well as the methodologies that can be acceptable forms of ID. Victor makes a really good point. The gateways for inclusion are now immense. In the same way that I can walk into a physical branch to get access to an account, that same access to financial services in certain countries is the local kiosk, right? In other countries, it's completely digitally. So you need interoperability on the gateway, and you need consistency of framework so that multiple jurisdictions in a now borderless world can actually access, and the law has to require it. And financial services are hysterically antiquated from a legislation perspective. Today, financial services the world over, right, have to own your private data even when you leave the institution for a further 5 to 7 years. That is codified in law. Makes no logical sense, but that law needs to change, right?
Yeah, so what I'm hearing is a call to regulators and policymakers in order to modernize a framework just to improve and enhance ID. But I just want to come back to what Victor was saying before in terms of the role of smartphones and actually the access to digital infrastructure and the access to actually having connectivity. And this is not an issue of only emerging economies. In advanced economies, it's the same, maybe with other rationales in terms of digital literacy or financial literacy, and specifically for the elderly. So I just want to double click on that and ask you, okay, Web3 solutions on blockchains are great, but how can we tackle the challenge of access to digital infrastructure, connectivity, again, not only in emerging economies, but also in advanced economies? So maybe, Victor, do you want to start with that?
Yeah, so the issue of connectivity, essentially, you have to look at it, number one, from how do you create infrastructure on the ground, which would make it far much easier to actually onboard these particular customers. When we talk about unbanked, unfortunately, one of the key things is there's often a very unrealistic definition of who these people are and what these people spend their time doing. Majority of the time, someone who is unbanked is economically active. This is an individual who finds alternative solutions to their lack of having a bank account. They find alternative solutions to their lack of having a credit card. So they already have different mechanisms in which they use to have their day-to-day life go by. So it's imperative to then build into this already existing infrastructure that a lot of these people have created informally. One of the most advantageous ones of recent has been the use of MPOS devices or mobile point of sale devices, right, which are very, very cheap Android-like devices, which have both the capability of running, low data applications such as a self-sovereign ID app and transactional applications such as a basic wallet to accept and receive money and be able to do other transactions. And by using this agent model that has already been popularized in these informal economies, there is a massive, massive opportunity to be able to then have adoption at a higher level by actually incentivizing majority of people to go on these operations. Again, if you look at the lack of traditional infrastructure, whether it's the lack of bank branches or the lack of even government offices in some areas for people to do their civil services, whether it's getting an ID or getting a passport, we can decentralize this by taking advantage of this new technology, by taking advantage of the zeal and enthusiasm of a lot of young people. I mean, Bitcoin, when it first came out and was starting to be popularized around Africa, it wasn't being done by major institutions. It was being done by individuals who had seen the advantages in remittances, who had seen the low-cost advantages in moving and transferring funds. So the same can be done for identity in the sense that we can make it something that is extremely low cost and offers some form of incentive to the broader populace who will take it upon themselves to make sure that whoever's in their village or whoever's in their town is essentially using this platform because of all the numerous advantages that can be provided. And what that does from a connectivity standpoint is that it makes it far much easier now to justify additional investments, whether it's you just using low-tech satellites or ensuring that you have even fiber going into some of these areas. And again, one of just taking a simple example, in Africa, in my country, when WhatsApp was becoming popular, you had all these barber shops, you had all these tailors, you had all these informal areas, with signs that would say, we install WhatsApp for you, because it was very popular. And people used to pay to actually get WhatsApp installed on their phones instead of just downloading it themselves. And that's how it actually became popularized, by sort of this organic growth from the community. So yes, someone is willing to invest in having Wi-Fi at their barbershop for people to download this application, such as an SSID application, because there is some form of economic incentive which is going to allow them to earn some kind of income. So there are different models we can definitely look into, but chief amongst them is to, number one, plug into what people are already doing, and number two, creating incentive structures which would justify making an investment to increase connectivity in their neighborhood and increasing connectivity even in their village, on top of what government and larger private sector is willing to do.
Inka, what do you think? Would this approach work, for example, in Nigeria?
Well, I think basically one of the things Victor mentioned is doing it by design, and I totally agree that we need to think about it around what people are doing and how people are doing things. We need to think about different models of connectivity, online versus offline, centralized versus distributed, because network, when we think about infrastructure, there's different types of infrastructure. There's digital infrastructure, financial infrastructure, social infrastructure, etc. So even at the financial infrastructure stage, when you look at how do you even agents, with Victor mentioned agents, how do they even rebalance? How do they manage the liquidity and float when they're in remote areas? So it's a lot more thinking around how do we solve for these things, because any telecoms company will tell you that, yes, technology is advancing, but the business case to deploy technology in all locations doesn't exist. So it goes back to how do we build a digital strategy around this, and how do we address economic inclusion as well? Because those are things that we need to critically start to think around. Otherwise, we're going to also create a secondary problem, which is urbanization and everyone sort of trying to crowd into the city centers. So there's a lot of work to be done, but many different layers. Thank you.
Totally agree. We're running out of time, so I would like to double check if there is any question from the audience before we leave. And I see the one hand there, Jeff from UCL.
Hi there. So I wanted to raise attention to two points that Yinka West had said. The first one was that I think are interesting. The first one was that these silos for identity are inefficient. I wanted to ask the panel and also Yinka, have you considered that perhaps these inefficiencies are actually beneficial, useful frictions that allow people to keep their identities, their linkages separate, allowing them to not be profiled on the basis of relationships between, say, their tax authority and their driver's license, which actually helps people to avoid profiling risk. That's number one. And the second thing that Yinka said that I thought was interesting was, we want to give people an alternative to cash. And I want to ask, are we trying to replace cash? And if so, why? Especially given the fact that cash is an asset that we own, and debit cards are weak legal claims on bank accounts. Thanks.
Okay, let me start with the second one. We're not trying to replace cash, we're trying to reduce the amount of cash. Why? Well, cost of cash distribution. There's many arguments around that: corruption, transparency, inefficiencies, etc. But either way, it's splitting hairs in a way. But I think, again, that's why one of the use cases for the central bank digital currencies in terms of reducing the cost of cash management, etc. And for countries like ours that, again, print our notes abroad, it's also a savings on foreign exchange. All right, so I'll put that there. On the second question regarding silos, definitely they do help as well. But then again, who are we helping? So we also need to look at it from the individual perspective and then from the whole systemic perspective. So when you have various redundancies within a system, it's ultimately going to cost more. And who is going to pay the end user? And what the end user is complaining about is cost to use. And the financial institutions are also complaining about cost to serve. How do you scale if you're only going to be limited in a certain area? So rather than creating silos, how do we pool resources together and ensure that we can actually scale and we can be more efficient? Issues around taxation, I know that we all want to hide, but then again, at some point in time, things have to ease up one way or the other. Thank you.
We ran out of time, so I would like, if you can give a big round of applause to the panelists, and we can take this conversation offline, of course. So thank you.